Several big tech names are reporting earnings this week. To discuss the outlook for the Mag 7 and big tech, we want to welcome in Daniel Newman, CEO of the Futurum Group. Daniel, it is good to see you. I can't think of a better person to have this conversation about the Mag 7. It feels like even what we've seen so far, out of just two out of the gate, we are seeing that divide, right? That bifurcation between the winners and we'll call it laggards. I don't want to call them losers. Tesla really feels very bumpy. They missed expectations. I know you have some thoughts on Tesla. What's your thought off the back of it, especially when Elon Musk saying, basically prepare for a few rough quarters? Or some rough quarters.
I like that you use the word diverging and bifurcation, because we're definitely seeing the same thing in the Mag 7. Elon Musk and Tesla isn't traded as a company based on its fundamentals, based on EVs, based on automotive. There are some institutions, traders, and analysts that they kind of rate it that way.
Yes.
But if you actually look at the way investors think about the company, they're thinking about autonomy, robotics, AI into the future. So the EV thing is sometimes like this lagging story, because for some time now, its business on the car side has not performed up to any level that really justifies $1 trillion valuation. Having said that, when you think about the future, who's going to win the race to autonomy, physical AI, you certainly hear Jensen and Elon talking about this multi-trillion-dollar future. Investors are betting on the long term here. They're betting that Elon Musk is going to figure this out, that he's going to be able to drive robo-taxi to $1 trillion valuation, that he's going to be able to build the energy business in Tesla. And I still think there's a little bit of a belief that he's going to be able to wrap a bow around all of this: SpaceX, XAI, Boring Company, Neuralink, Tesla, and that somehow this is all going to tie together. People are betting long on Elon Musk's ability to do something much bigger than EVs. But fundamentally, I rank them dead last in our Mag 7 because it's just a tough stock to own unless you have a very long future and you're willing to hold on for a long time.
Yeah, I mean, look, it's at the bottom of the list in terms of performance this year for the Mag 7. Yeah, so so not surprised that when you think about it, you have to. It's clear for those who are believers, you have to be a believer in the future of it, and it's hard not to see it valued without taking into account now. I mean, what the current landscape is, because you kind of have to, for at least the next few quarters, incorporate that. But let's talk a little bit about Alphabet, Google. It feels like it's like a sigh of relief there with regard to its earnings. There was this big concern about AI cannibalizing search. That was not the case with this most recent quarter. They beat expectations on both the top and bottom line, but they are leaning into CapEx further, and it seems like the Street's okay with that now. What's your thought on their latest results?
The Street should always have been okay with it. Alphabet generates $75+ billion a year of cash flow. It's got a very strong core business in ads. YouTube is a rocket ship. Its cloud business produces income. They have to be making long-term bets. They have to be investing in Waymo. They have to be building infrastructure for the future. The Alphabet story is often misunderstood, though. Alphabet has this deeply integrated AI stack that is so valuable. They've been doing custom chips. So we hear about possible competition for NVIDIA. Well, I think there's more of this kind of internal-external workflow of where those custom chips and the Broadcom chips end up going. Google's ability to build the stack, build Gemini Advanced, a very highly performing model on all of their own infrastructure, is a unique differentiator that will give the company a long-term advantage. Last thing I'll say, and I think is really important, is search will be cannibalized by generative search at some point, but I think Google, much like Apple, has a road ahead of it with its iPhone install base to get AI right. Google has the vast majority of people, as you saw the numbers still going up last quarter, using traditional search, and now they've got AI overviews in their search. They've got AI baked into all their other products and services. So maybe some of the early OpenAI defectors are going to leave and never come back. But having said that, most people are still using search, whether it's in your iPhone, built right into it, or our friends, uncles, and brothers are still on it, and now AI is baked right into it, so they're getting that generative experience.
Which I do like that they do that now, that it's not like you don't have to separately go to Gemini. You can go straight to search and get a little bit of this AI overview. I like that. When you look at and I'm glad that you brought up Broadcom, because it is catching a bid today off the back of Alphabet Google's latest results, and some argue that it should be in the Mag 7, or let's call it Mag 7 plus. Yeah, right? So you point out that, big tech has this make or break moment for the rally, right? We've seen, both the NASDAQ and the S&P 500 hit new highs. What do you mean when you call it a make or break moment?
Well, so far the numbers that have come out have been supported because Tesla wasn't a surprise to anyone. Everyone kind of knew those numbers weren't going to be particularly good. But we've heard this CapEx boom. We've sort of seen the rally. We're getting that frothiness. We're hearing meme stocks again. People are chasing the kind of quick wins. It's all kind of set on the precipice of good, solid, fundamentally strong companies. So when those start to break, the stuff at the bottom breaks really, really hard. So when you start to see things rallying 10 and 20% in a day that aren't even companies with fundamentals in business, Krispy Kremes, you start to go, okay, if all of a sudden the CapEx numbers start getting pulled back, if all of a sudden, Google's performance, search is getting crushed, Meta comes out next week with bad numbers, Apple's phone numbers in China and around the world are starting to depreciate meaningfully, everything falls, the dominoes fall with it. So we've got all this kind of euphoria and this exuberance in the market right now, but I still think it's based upon the big, strong, foundationally sound companies executing. And so far, like I said, with the exception of Tesla, it has looked good. And like the IBM, ServiceNows, the enterprise businesses are looking pretty good too.
It's so funny that you mentioned that if about Meta. I can't even see Meta.
Missing?
Yes, I mean, I know that's for the sake of argument here, but that feels like that one's a stretch, especially given its outperformance.
I mean, we see Meta right below NVIDIA, so it's kind of NVIDIA then Meta for us. We love how they're applying it. We love the fact that he's betting big on this talent. He's racing for that $20+ trillion of productivity that's going to come from AI. He's basically like a sports franchise. He's like the Yankees right now. He's saying, look, we're going to win the World Series, and we're not going to win it by only building the best tech. We're going to go steal the best people.
Talent, yeah.
And if talent is the key ingredient, who's doing better than Zuck right now in terms of winning that race?
All right, we'll have to leave our conversation there for today. That's Daniel Newman, CEO of the Futurum Group. Our thanks to Daniel for a look across tech.